Welcome to the First Responders Wealth Network. Our mission is to help all first responders change their mindset towards money and educate how to build long-term wealth through real estate investing. Are you ready?
All right, welcome back to another podcast, First Responders Wealth Network, and I got Claire and Angie here, and I'm excited to dive into private lending and mortgages, and I think a world or a side of investing that a lot of people maybe aren't familiar with, or it's definitely not a traditional way of investing and even getting loans and mortgages, etc. So why don't you guys introduce yourself, and then we'll get rolling. Who wants to go first? First off, for those of you who are listening, I got obviously two guests here, so we got three screens. So we'll try and do our best so we don't talk over each other. There we go.
Awesome. So I'm Claire Drage. I'm the CEO of the Windrose Group. We are a mortgage alliance team, and I've been in the mortgage sort of investing industry for over too many years, actually. So quite a few years, at least 20. Let's just put it that way. But I'm a bit of a serial entrepreneur. You probably tell from the accent, originally from England, but actually left England when I was 20 and spent 11 years in Spain with real estate, property management. We actually had an industrial laundry. But our time in Canada for the last 23 years has been primarily with regards to financing, mortgages, etc. So I run a large team across the country. We are super blessed to be number 3 in the country in Canada and top 1%, which is like awesome. It makes Angie and I super happy. And with that, our primary focus is education. Like, we do mortgages, but let's face it, mortgages are boring. You know, people want money, but how can we make more money and use smart financing options to help people create that wealth that the banks don't want to tell you about, or no one else wants to tell you about? Because how do the rich get richer? By keeping quiet about how they get rich.
Yeah, absolutely. The financial IQ and education is key. Definitely. All right, Angie, introduce yourself and let people know who you are.
Sure. I'm Angie Pettyjohn, and I'm so honored to be part of the Windrose team of Mortgage Alliance. I've been in the industry now for over 12 years. I started off with the Green Bank and learned very quickly that if I was going to be a smart business owner, that the best way to go was to become a mortgage broker. So I've been blessed to be with Claire now for 3 years and investor focused. So it's been a pleasure, and my daughter is my business partner. So that's been fantastic.
Oh, that's awesome! I didn't know that. That's cool.
Yeah.
You know what? That's like a whole education in itself. Is she? How many years has she been doing that with you, or is that fairly new?
That's fairly new. So she started off, the reason why I joined Claire's team is because of the education. She's been, I've known Claire for quite a few years. And actually we worked together with another brokerage a few years back. And we realized that we needed the education for Victoria to be up and running very quickly, because I just didn't have the time with my volumes to be teaching her at the same time as going out and getting the business.
Cool. So let's dive into who exactly you guys serve or service, and why this type of investing or private lending isn't always, I guess, talked about or common trade, I guess. But so who do you guys service? And let's start with that.
We really service both the borrowers and the lenders. So as mortgage brokers, investor focused, we take very good care of our borrowers. We start to do our due diligence on them fully. We ensure that there's a pool load, as Claire likes to say, there's a pool load of documents that we collect up front to make sure that they qualify for the private financing that they've requested. So we do our full due diligence on them, as well as doing a full due diligence on our lenders. So at the end of the day, we want to sleep at nighttime. And the deals that we love to do are the flips, the burrs, the buy, rent, renovate, the refinance deals. Those are the ones that we absolutely love, the first mortgage deals. We stay away from the consolidations because those are the ones that we typically have issues with. So we stay in that field. So to answer your question, really, we service both sides, the borrowers and the lenders, and we're matchmakers.
Yeah, I mean, you've pretty much summed it up. I mean, our role, not only from a licensing perspective, we were licensed to broker mortgages with the government. And it's one of the best things we do is finding that balance between underwriting the borrower, making sure they're a good fit, and ultimately we're giving them a product which serves their need. And with real estate investors, it's quick, easy, fast cash so they can scale up their portfolio if they're buying. On the flip side, when you're the lender, what extra security are we putting onto the deal? How are we ensuring that they're going to get their money back? So some of the key questions we need to answer for the lender is, why is the borrower using your money and not the bank's? Because your money is going to be more expensive because obviously we want a higher return. What are they going to do with it? How do we control it? And finally, how are they going to pay you back? So this would be what we call the exit strategy, is how they're going to pay you back. So if Angie's going to refinance them in 9 months or a year when the renos are done and there's good paying tenants and the value of the real estate has gone up, not just because we're in a crazy market, but they've actually forced appreciation, that exit strategy is to refinance with the bank. So with our borrowers, we're not just qualifying them to give them the money up front. We're tracking and monitoring them during the term of the mortgage to ensure that we can execute on the exit strategy to pay the private lender back, get the lender's money out again with a different opportunity, sometimes with the same borrower, if they're doing multiple, and then we get to rinse and repeat. I think the one thing I would add to what Angie said is neither Angie or I are collection agencies or default specialists. We're specialists because we know how to handle default. We have to be, but that's not our role. That's not what we want to do on a daily basis. So we really focus on the right borrower to ensure those three questions are answered, and we've got the right security so there are no defaults, which we're super proud to say we've had 0 defaults during the pandemic, which is like, we've had delays, but 0 defaults.
Cool. So would you guys be able to kind of walk me and people who are listening through the process? So say, for example, you find a distressed property, you want to add value to it, whether it be a BRRRR strategy or, a simple flip. People who are listening to this be like, man, I need some cash. How do I do that? So what's the process there?
So the process is pretty easy. It starts, well, yes and no. It depends how organized you are, but it starts with a discussion. So we really need to understand if you're the borrower. So we're talking about the borrower now. So our specialty area is if you want to borrow money to either flip properties or to do that BRRRR strategy, like Angie said. So the first thing we need to do is understand you as a borrower. So what is your criteria? In order to be successful flipping and BRRRRing, you need 3 things: time, money, and expertise. So we make the assumption the borrower has got some time. So whether you're doing shift work or irregular hours and or you've got a partner, you could be doing some contracting. And so if you've got the time, we basically provide you with the money, but do you have the skill or the right power team around you to find properties, preferably under market? You don't want to overpay. You know how to figure out, the cost, contractors, the cost of the project, because the questions we're going to ask you is, how much time are you spending on this? What is your goal? How long is it going to take you? What is your market? And then we're going to ask the borrower to test drive that market. So, and we're just really understanding the character and the seriousness of the borrower, because you need time, money, and an expertise to do this. We don't want to loan to what we call HD TV trained, which in 22 minutes or less, that program you watched at the weekend, you think you can flip property and make 80,000. Unfortunately, it doesn't always go as well as they make it look on the TV. So we want to make sure we're setting the borrower up for success. And sometimes Angie and I will spend months and months, I wouldn't say necessarily coaching, but working with borrowers for that to help them figure out what they need to be successful at this. So let's assume that they found a market, they've test driven their strategy, and we start talking about what is the end goal. So the end goal is you want to sell this property for $800,000. So we're going to go backwards. We're going to go, okay, take $800,000. We're going to take 93% of that $800,000 is what you'll have left from the sale after realtor fees and legals. Now from that, we need to take off what you borrowed. Maybe you borrowed $600,000. So let's assume for easy math, you've got 140 left, but you've got interest costs, you've got carrying costs, and maybe you needed to get a loan for the reno costs. What is your end profit? We need to expected profit. We need to know that number before you put an offer in, basically, because we've got to figure out the math. You could be test driving the strategy in certain markets, but it doesn't work because there's not enough money or you're competing too heavily with regular home buyers. So the process is it starts with a discussion, understanding what you know. Can you answer those 3 questions? Where are your gaps? Do we need to align you with some power team members to help you with those gaps? And then subject to that, if you're like, yep, I'm ready to move forward, then we're going to give you a big list, that poo load of paperwork that we're going to ask for. Because what Angie and I need to do is build a profile for you as a borrower so that we can prove to the lender who's going to loan you the money, we've done our due diligence, we've checked your credit, we've checked your net worth, we've answered those 3 questions, and we've almost built kind of like a bit of a business plan for that borrower. Because we need to be, if Angie and I, we decline more borrowers than we accept. I'll be honest with you, because some come with a dream and we have to see if they have what it takes to make that dream a reality.
Balloon
Because
poppers.
ultimately, that's yeah, lots of dreamers.
Yeah. I mean, do you see a lot of people approach you with just no, I mean, one thing is not having, I guess, the experience, but there's a lot of new investors who are learning. Maybe they're getting mentored or they're getting coached or they're getting educated, and then they come and like, okay, I know how to do this. I got the sheets, I got the analysis, the underwriting, but I've never done one before. Is there like a criteria for those people who you can tell, be like, okay, they obviously have someone supporting them along the way, but they've never really done anything? Do you guys say, sorry, you need at least X amount of property, or what is that gap that you referred to that maybe you kind of link up? Is it just a higher rate or what? Go ahead.
So when it comes to experience, well, there's a spectrum of financing that we actually allow. So we could do a full 100%, whole kit and caboodle, the private lending, the down payment, closing costs, renovation costs. But if you've never done this before, we probably will scale that back to about 75% the value of the purchase. And then the borrower has to come up with the down payment. So they need skin in the game. And I would say for the first 2 or 3, you'll be in that zone, 75 to 80. We might bump you up to 90% by the 3rd one. It's really important to be on time, on budget, not miss payments, for us then to start to move that needle from 80 or 75% over onwards to the 100%. So, okay. Claire, if there's anything else.
So the only thing I would add to that would be, and Angie's absolutely right, if it's your first one, we need skin in the game. Mm-hmm. Now, we have considered doing that higher loan to value or 100% for people where they've been coached or they are being coached by one of our existing experienced investors. So if, basically their coach is vouching for them, and that coach has done 20, 50, 100 with us, that's going to add, an element that would provide us with the assurity. And then the other thing would be, people go, well, if you're only going to give me 80% of what it's going to cost me to do this project, there are so many other ways for us to find the 20% to what you need. So if we're looking at a secured line of credit on your principal home, putting out equity, basically ensuring you've got something to lose as well. It can't just be all on the borrower on your first deal. When you get to a stage when you've done 1 or 2, we can tell you lots of scenarios where the first 1 or 2 do not go well. But if you've got some skin in the game and you're prepared to invest in that, because you're learning. Like your first one, you think you've got everything done correct on paper, but one thing you cannot predict is the actual reliability of your trades, whether a pandemic swipes across the world.
Yeah.
And just all those, you think you've got a great power team, but really you don't know until they actually start doing the work. Things like the cost of 2x4s going up 348% in the last 18 months. There's all those things that have you put them in as a contingency. So typically your first one or even two, lucky if you're break even. I don't want to sound negative, but that's your learning. That's your opportunity to go, okay, that contractor wasn't any good. Not going to line up at Home Depot anymore for product. I need to find a different product source. Like you're really sort of feeding the way you go. When you get to a point where you're a machine, we literally will say to you, I have one right now and he's capped at 2 million a week. You can't buy more than 2 million in real estate a week.
Darn.
He's approved.
Yeah.
So he's got opportunity. He's going to act fast. He's got a track record with us and we're doing over 100%. But we've got to build to that. It's like dating, right? You don't propose to someone on the first date. You've got to warm up a bit, right? Get some skin in the game, if you like.
That's awesome. Okay, perfect. That clarified it actually really well. So let's talk about then like rates. Now I know, people throw all these different numbers around depending on your experience. So, and I know it's not a black and white answer, but maybe you can just kind of give some criteria, and then we'll also dive into after that people who want to lend as well, what kind of returns they can get. But let's stick to the investor who's actually borrowing the dollars.
Definitely. So let's talk about interest rates. So first of all, hopefully everyone sat down because these are not your fully discounted 1.5% interest rates. So you're typically looking anywhere from 8 to 12 on the first mortgages. That will include a lender fee. And there will also be an additional mortgage broker fee, which is typically on average 1% of what you're borrowing.
Okay.
Because how Angie and I get paid is we charge a mortgage broker fee. We do not take a cut from what the investor gets. We keep our business model very simple. We simply charge a mortgage broker fee. You've then, of course, got your average legals, etc. If you're looking for promissory note loans, so a loan for the renos and carrying costs, you're looking at 17%. Now, people immediately say to me, oh my God, that's horrific. Well, one, you need to change your mindset a little bit. It's a shift. Because if I said to you, you run a business, because in essence, each borrower is a business. So you're running a business. And I said to you, I can give you 2 million a week at an average cost of 12% for your business, or I can give you $300,000 at 1.5%. What would you want to grow your business? So it's going to cost you more to borrow more, but also how quickly do you think you could scale up? If a borrower can buy 4 properties in the same neighborhood and have economies of scale where their trades don't even need to leave a job to quote for other jobs because you're keeping them in jobs for months and if not years, then you've got economies of scale with product acquisition, with your trades, with opportunity to basically knock on the door of a homeowner and say, I can buy your home cash, I can close next week. So the opportunity cost outweighs it, plus also the time. You're not paying 17% for 25 years. You're paying it for the time it takes you. And it can also be a great motivator because when you know the weekly carrying cost of those funds, it helps you speed up your time zone. So if you know it costs you $4,328 each week you own this property in interest and carrying costs, then if your trade says to you, I can't show up for 4 weeks, well, that's costing you $16,000. Now you're starting to go, whoa, time is money. Time is money.
Yeah.
I want to add something. So I often get asked, why are we going private financing? And simple answer is we go regular banking. Yeah, the rate is low going in, but the rate going out when you're refinancing or, flipping to sell or whatever is crazy high. So we've done that math over and over again. We know that for a short period of time, if you're flipping, the rate may seem higher on the onset, But in the end, your profit is in your pocket. The bank is not taking that for fees.
And also just to add in there too, people, sometimes you go find an opportunity and the banks won't even lend you that money because the house is so distressed, or simple as there's no kitchen, and it could be fine, but there's no kitchen, and that meets their criteria of their inability to lend. So I mean, there's lots of scenarios that can come into place where you need private money or need this type of equity or capital, I guess. And so just be aware that it's a tool in your tool belt if you can't go that traditional route, or you don't have the opportunity of having a stack of bucks in your pocket to do the project.
And to add to that too, the one thing that we're specialists in is that strategic lender placement, because banks don't finance flips. They don't. You can't go into a bank and say, give me a mortgage, I'm flipping a property, because they won't make enough money, so they just don't do it. We want to make sure that, if you're flipping, but 3 years from now you want to buy a new principal home, or maybe you want to buy multifamily or single family to hold, we want to maintain your relationship with the right banks. And we don't want to mess with that, because once you get blacklisted with a bank because you didn't tell them you were flipping, they're not stupid. They're pretty smart. When they see you're buying properties and then, 6 months later, you're paying back the mortgage. We don't want that to negatively impact your ability to grow in other areas and borrow money cheaper for long term. Private financing is not supposed to be a permanent financing solution, but we want to save that bank relationship and be really strategic for the future when you want to hold a longer term.
I have a question for you. For your loans, do you traditionally annualize it over the 12 months, or would you say, hey, all right, this is going to be 12% for 6 months? So if you go, you know what I mean? Like, say, for instance, I'm planning on my project's going to be 10 months, but then all of a sudden the market goes crazy and I'm going to sell it early. Are you paying on the months that you've endured, or is it the full term that you've negotiated on? Maybe you can just elaborate on that.
Yeah, absolutely. So because we know our borrower, we know our exit strategy, we know what they're doing, we adjust the terms and conditions. And so our standard is a 1-year term. So the interest rate and lender fee applies for the whole year. However, fully open after 3 months. 3 months, can't get my fingers up here, 3 months. So what that basically means is, like Angie said, it's not the rate going in, it's what's it going to cost you to get out of this? What's the flexibility? So we're able to customize the product, the mortgage product, to meet the needs of both. So the beauty of that is it's fully open after 3 months with zero penalty. So if I need the money for 4 months, I'm paying for 4 months. We're not adding a 3-month penalty or you've got to pay for the whole year. We have had a couple where they flipped and closed in like 8 weeks. The penalty is going to be 4 weeks of interest. So that the lender has basically earned at least a minimum of 3 months. Now, just flipping, because we're on this subject, if you're the lender listening to this and thinking, well, I don't want my money back. Well, you do. You get your money back because we get it out immediately the next day. So there's no downtime. And also the lender fee you collect up front is a fixed return. So the more times your money churns, the more you're collecting a lender fee, which is actually increasing the lender's return. And for that, Angie and I are happy. We've now got multiple deals going all the time. The borrower's happy because they've got flexible terms and they're not being, it's not detrimental to them when they pay back. It should be a positive experience. And the lender's happy. Their money's at play. Awesome.
Difficult question. No one always wants to admit this, but what's your default rate for people who are the the lenders? If I'm lending you money, very conservative, they're going to ask me this question. I'm sure they're asking in their head is, what's the rate of default in this world or your world?
I haven't had any defaults personally. Yeah.
Zero. But it really does come down to our borrower profile. Like our borrower has typically got good to excellent credit. They own their own home. They have other assets. It's not little Johnny living in mum and dad's basement with not a penny to his name, trying to flip his first property, and they're professionals. They've got the time and all the expertise surrounding them to be successful. In my 20 plus years, I've done private lending to regular homeowners in the past. I actually don't do any of that anymore, because the only defaults I've ever had in 20 plus years has been with a regular homeowner. who, needed to borrow money because of job loss, divorce, poor spending habits, poor personal habits. And when they're starting to spiral and the only thing they own is their home, they forget that's an asset. And
same thing happened to me, Claire. This was about 3 years ago. I matched up one of our colleagues actually as a lender with one of our borrowers, and we had done the disclosure and everything. We done the whole underwriting, and when it was time to sell the property, the borrower didn't want to sell it, and it became such a mess that I will never do one of those again. And another point I wanted to make is it's so key for your listeners to partner themselves up with investor-focused mortgage brokers like ourselves. And so it's a shameless plug here, but I truly believe this. We do private mortgages daily. This is not something, it's a one-off. Most mortgage brokers see this maybe 3 or 4 times in their career, maybe in a year. You want to partner with someone who knows what they're looking for, because again, and I go back to this, I want to sleep at nighttime. I'm partnering the borrower and the lender up. That has to be a great match. And in the end, I want to sleep at nighttime so that we can rinse and repeat with the same people.
Yeah. Beautiful. Well, I always preach active and passive income, and this is like a great opportunity, whether you're active or passive. So there's a lot of good nuggets in here. If you guys got to listen to this again, definitely do. I appreciate you guys coming on. Unless there's anything else you want to touch on that maybe I've missed that's really important. But before you do that, just make sure you let people know how to get a hold of you. So maybe email, website, phone number, whatever it takes.
Sure. I'm at Angie@pjmortgages.com. I also wanted to let your listeners know that Claire has written 3 awesome books, Be the Banker, Cash Flow, and Portfolio Growth, Claire. Mm-hmm. And we will have those books emailed to your listeners. They just have to reach out to me, and we will do that. And Claire?
And I would say, so reach out to Angie. And I think my only passing remark would be that if you're listening and you're thinking about being a lender, what can you use? So you can use an RSP, a LIRA, a TFSA, cash, a line of credit. I mean, all of these can be invested in private mortgages, and we can help educate and facilitate that. And specifically, like Angie said, one of the Be the Banker book. I'd like to leave with something one of our existing lenders sent in a holiday card this last year. And it really sort of resonated, where he said that he's a private lender, had loaned about $150,000 to some of our borrowers. And his comment was, thank you for allowing us normal folk to actually invest in mortgages. And, and it was kind of like, you know what, there's people don't even know this exists. Mm-hmm. They don't even know that they can be the bank. Having used the bank for 20, 30, 40, 50 years, we enjoy turning the tables and sitting the other side.
Well, I think you hit it on the head really early on. One of your first comments was, the rich often don't share their secrets, and they sure don't educate us about this kind of stuff in school. So unless your parents or people around you are doing it, you really don't know. So that's why self-education is like so crucial. And I'm glad that you mentioned the resources of where to get your finances or where you can lend from, because I didn't touch on that, and that's like everything. So that's crucial, especially guys. I'm in the mindset I'm pulling my pension when I'm ready to go. So you have the resources to self-direct and actually invest your own funds that can get a significant higher return than your pension would ever pay you, in addition to that wealth that you can pass on to generations. So that's my argument. I know Omers hates me, but that is what it is. So thanks, guys. The resources, you have their contact information to get those resources or the books, but also I'll leave the information in the show notes as well. Maybe I'll bleep out the Omers at the end there. But anyway, all right, guys. Thank you very much, and I appreciate you coming on.
Thanks so much for having us, Dave.
Thank you. Our pleasure.
Sweet. Thanks, guys.
Thanks for listening. Don't forget to rate and review on iTunes. Also, check out our website at 911wealthnetwork.com or contact Dave directly at 911wealthnetwork.com. Stay safe out there.